Asterisk, asterisk voice, asterisk, asterisk. Welcome back to XRP Economic Radar, your trusted source for the latest XRP news, market analysis, and crypto insights. Today we're diving into a question that is creating major debate across the crypto community. Is XRP overvalued at today's price? With XRP trading around current market levels and maintaining one of the largest market capitalizations in the digital asset space, investors are split into two very different camps. On one side, critics argue that XRP's valuation has climbed beyond what its fundamentals can justify. On the other side, supporters believe the network is entering a new era of adoption that could make today's price look cheap in hindsight. In this report, we're going to break down both sides of the argument and examine what could be driving XRP's value right now. Whether you're a long-term holder, a new investor, or simply watching the market from the sidelines, this discussion could help you better understand where XRP stands in today's rapidly evolving crypto landscape. One of the biggest reasons some analysts believe XRP may be overvalued comes down to its tokenomics. Tokenomics refers to the way a cryptocurrency's supply and demand mechanics influence its long-term value. Critics point out that XRP does not reduce its supply at a meaningful rate despite network growth and increased transaction activity. Unlike some cryptocurrencies that burn large amounts of tokens over time, XRP's system removes only a tiny fraction of coins from circulation during transactions. This has led skeptics to argue that even if XRP adoption grows substantially, the direct impact on scarcity remains limited. In their view, a digital asset worth tens of billions of dollars should have a stronger connection between network usage and token appreciation. This concern has become one of the most frequently repeated arguments among bearish analysts, who question whether XRP deserves its current valuation in the marketplace. Looking deeper into the numbers, the argument becomes easier to understand. Every transaction on the XRP ledger burns a very small amount of XRP as a network fee. However, the amount destroyed is incredibly tiny compared to the overall supply. Even with millions of daily transactions taking place on the ledger, only a few hundred XRP might be removed from circulation during an entire day. Since the network launched more than a decade ago, only a small percentage of the total supply has been permanently eliminated. When compared to the tens of billions of XRP currently circulating in the market, the impact is almost negligible. This is why critics insist that transaction growth alone is unlikely to create significant upward pressure on the asset's price. According to this perspective, XRP's valuation could be disconnected from the economic realities of its supply structure. The bearish case becomes even stronger when investors compare XRP to other digital assets that have more aggressive scarcity mechanisms. Some cryptocurrencies reduce supply through staking locks, large-scale burns, or strict issuance schedules. In those cases, rising demand can collide with shrinking supply, creating conditions that naturally support higher prices. XRP's critics argue that the same dynamic does not exist here. They believe that network activity and adoption are not translating efficiently into increased value for token holders. As a result, they question whether an asset with such a large market capitalization should continue commanding premium valuations. For these observers, the concern is not whether XRP has utility. Instead, the concern is whether that utility is powerful enough to justify the price investors are currently willing to pay in the open market. However, the story doesn't end there, and this is where XRP supporters push back hard against the overvaluation narrative. Bulls argue that focusing solely on token burns misses the much bigger picture. They believe XRP's value is increasingly tied to the growth of the broader ecosystem surrounding the XRP ledger, rather than the simple reduction of supply. According to this view, the network's utility, institutional partnerships, and expanding financial infrastructure matter far more than daily burn rates. Supporters say that judging XRP only through the lens of tokenomics is like evaluating a technology company solely based on its share count, while ignoring its products, customers, and future growth opportunities. They argue that XRP's real value comes from the financial ecosystem being built around it and the potential role it could play in global payments and asset tokenization. One of the strongest points made by XRP bulls is the continued development taking place across the XRP ledger ecosystem. Ripple and the broader XRPL community have spent years building services, expanding capabilities, and improving infrastructure. New features continue to be introduced with the goal of attracting developers, businesses, and institutional users. Rather than remaining a simple payment-focused blockchain, the XRP ledger has gradually evolved into a platform capable of supporting a growing range of financial applications. This evolution has helped create optimism among investors who believe the network's future utility could be significantly larger than what exists today. For these supporters, today's valuation reflects expectations about where the ecosystem is heading, rather than simply where it stands right now. Another major factor supporting XRP's valuation is the rapid growth of tokenized assets on the XRP ledger. Tokenization has become one of the most discussed trends in financial technology, because it allows real-world assets to be represented digitally on blockchain networks. These assets can include stocks, bonds, commodities, real estate, and other financial instruments. Over the past year, the value of tokenized assets hosted on XRPL has increased significantly, demonstrating growing interest from institutions and market participants. Supporters argue that this trend could eventually bring billions of dollars onto the network. If that happens, XRP may benefit from increased relevance within a larger financial ecosystem. This possibility has become one of the key drivers behind bullish expectations for the asset's future. Institutional adoption has also helped strengthen confidence among XRP investors. Several major financial organizations have explored blockchain solutions and digital asset infrastructure in recent years. As traditional finance continues experimenting with tokenization and blockchain-based payments, XRP supporters believe the XRP ledger is positioning itself as a serious contender in this emerging landscape. Every new integration, partnership, or pilot project contributes to the perception that institutional interest is growing. While critics may argue that not every announcement translates into immediate revenue or token demand, supporters counter that institutional engagement is laying the groundwork for future growth. In financial markets, expectations often drive valuations long before the full economic impact becomes visible. Another important element influencing XRP's price is the emergence of investment products designed to provide exposure to the asset. Exchange-traded funds and similar investment vehicles have become increasingly important across the cryptocurrency market because they make digital assets more accessible to traditional investors. When large investment products accumulate XRP, they effectively remove supply from the open market. While this process differs from token burning, the result can still create meaningful demand pressure. Supporters argue that institutional investment flows may become a more significant driver of XRP's valuation than transaction-related burns. If large pools of capital continue entering XRP-focused investment products, demand could increase regardless of the token's underlying supply mechanics. Market psychology also plays a critical role in determining whether an asset appears overvalued. In financial markets, prices are often influenced by future expectations rather than current fundamentals alone. Investors buy assets because they believe future developments will justify higher valuations. This concept applies to stocks, commodities, real estate, and cryptocurrencies alike. XRP supporters argue that today's price reflects investor confidence in future adoption, future utility, and future institutional involvement. Critics may see overvaluation, but bulls see anticipation. The difference between these perspectives often comes down to whether future growth expectations eventually become reality. If the ecosystem expands as supporters predict, today's valuation could appear reasonable. If growth disappoints, critics may feel vindicated. At the same time, it is important to acknowledge the risks facing XRP. Even the most optimistic investors recognize that future growth is not guaranteed. Competition within the blockchain industry remains intense, with numerous networks competing for developers, businesses, and institutional clients. Technological innovation is moving quickly, and the market constantly rewards platforms that adapt successfully. XRP must continue demonstrating relevance and attracting meaningful activity if it hopes to justify its valuation over the long term. Investors who ignore these risks may underestimate the challenges involved in achieving widespread adoption. This is one reason why the debate over XRP's valuation remains so active and controversial among analysts. Many neutral observers find themselves somewhere between the bullish and bearish extremes. They acknowledge that XRP's tokenomics may not be ideal from a scarcity perspective, but they also recognize the genuine progress occurring across the ecosystem. These analysts argue that XRP could be somewhat overvalued today while still possessing significant long-term potential. In other words, current prices may already reflect a great deal of future optimism, yet that optimism could still be justified if development and adoption continue accelerating. This balanced perspective has become increasingly common among investors who appreciate both the strengths and weaknesses of the asset. Rather than viewing XRP as either massively undervalued or dramatically overpriced, they see it as a complex investment with both opportunities and risks. The broader cryptocurrency market environment also influences XRP's valuation. During bullish periods, investors tend to place greater emphasis on growth potential and future opportunities. During bearish periods, the market often shifts focus toward fundamentals, revenue generation, and measurable economic value. XRP's perceived valuation can therefore change dramatically depending on overall market sentiment. What appears overvalued during a cautious market phase may seem perfectly reasonable during a period of optimism and capital inflows. Understanding this dynamic is essential because cryptocurrency valuations rarely exist in isolation. They are constantly affected by investor sentiment, macroeconomic conditions, regulatory developments, and broader industry trends. For long-term XRP holders, the key question may not be whether the asset is slightly overvalued today, but whether the network can continue expanding over the next 5 to 10 years. investors focused on long-term outcomes often care more about future adoption than short-term valuation debates. If the XRP ledger successfully attracts additional institutional users, expands tokenization activity, and strengthens its position within global finance, the network's value proposition could grow substantially. Supporters believe these developments are already underway. Critics remain unconvinced. The truth will likely depend on execution, adoption, and market conditions over the coming years rather than on any single metric observed today. Ultimately, the argument that XRP is overvalued has some legitimate foundations. The relationship between network activity and token scarcity remains weaker than many investors would prefer. The burn mechanism alone is unlikely to create significant supply pressure in the foreseeable future. From that perspective, skeptics have valid concerns. However, focusing exclusively on tokenomics ignores the broader ecosystem growth, institutional interest, tokenization expansion, and investment demand that continue shaping XRP's market narrative. These factors are providing support for valuations that might otherwise seem difficult to justify through supply mechanics alone. So, is XRP overvalued at today's price? The answer depends largely on which factors investors believe will matter most in the years ahead. If tokenomics and direct scarcity remain the dominant drivers of value, critics may have a strong case. But if ecosystem growth, institutional adoption, tokenized assets, and investment inflows continue accelerating, today's valuation could eventually appear justified or even conservative. As always in crypto, the future remains uncertain, and investors must carefully weigh both the risks and opportunities before making decisions. One thing is clear: the debate surrounding XRP's valuation is far from over, and the coming years may ultimately determine which side of the argument gets the final word. Thanks for watching XRP Economic Radar. Don't forget to like, subscribe, and turn on notifications for more XRP updates, crypto news, and market analysis. We'll see you in the next report.